Global use of the US dollar as a currency may decline further to 40 to 45% within the next few years, and some economic commentators fear another banking crisis in the United States. The recent geopolitical tensions are an additional danger for the de-dollarization, which can lead to the banking crisis in the United States again. If cross-border credit and investment dried up, it might further increase the risk of bad debts and could again hit bond prices, further reducing the value of the bank's assets and making their borrowing more expensive. The Fed and other central banks need to be alert to these rising risks, as it could be one of a series of blows that kick off a new crisis in the years ahead. Before I proceed, I encourage you to consider liking the video and subscribing to our channel to show your support for the channel. Moreover, if you have any suggestions, comments, or additional insights, please let me know in the comment section below. US regional lenders face ongoing challenges from rising deposit costs and risky office building loans a year after the biggest bank failures since 2008. The unexpected collapses of three banks, Silicon Valley and Signature in March 2023 and First Republic in May 2023, put a spotlight on how lenders managed risks to assets and liquidity as the Federal Reserve raised interest rates aggressively to bring surging inflation under control. The Silicon Valley Bank, one of the most prominent American banks, was counted as one of the top 20 banks in the US with over $215 billion in assets, collapsed. The bank suffered a massive loss of $1.8 billion due to the interest hike on the US Treasury securities. Days later, New York-based Signature Bank with over $110 billion in assets collapsed because its deposits exceeded the maximum permissible limits of the US Federal Deposit Insurance Corporation, while the share price of the First Republic Bank with over $215 billion in assets had fallen by 67%, and that of Western Alliance Bank Corporation had fallen by 90%. Not only this, the credit ratings of almost every prominent private bank in the United States have been downgraded. Before all this, Silvergate Bank, another institution dealing in cryptocurrency, also failed because of liquidity issues in the first week of March 2023. The way American financial institutions fell one after another last year predicts a kind of economic doomsday for the Western superpower. So let's understand why the US banks collapsed in 2023. Can other US banks also collapse? All these banks have a single story for their failure, which is directly linked to the interest of US Treasury bonds, which is further linked to the decreasing demand of the US dollar. As the demand of the US dollar is decreasing in the world, these bonds are also falling. And to make them float, banks have no solution but to offer higher interest rates, which burn holes in their liquidity. The renowned economist Dr. Nouriel Roubini, also known as Dr. Doom, who predicted the global recession in 2008 with utmost accuracy, is not only predicting another global economic collapse but also cautioning that this time problems are going to last long, maybe a decade or more. One of the main reasons for this upcoming recession would be de-dollarization. The American dollar, once considered the only currency for global trade, is losing its shine and being replaced by other currencies. Naturally, it is going to impact the American economy in a big way and can trigger an economic catastrophe for the US banks. Now, the Fed has stopped raising rates but has signaled cuts may not come for another several months, and investors have shifted their focus to pull their deposits in times of stress. Ryan Nash, banking analyst at Goldman Sachs, said the banking industry needs to make sure it has a strong hold on its access to liquidity, conduct in-depth deposit stress testing, and ensure it can withstand significant stress. He further added, "This is something that all banks will need to plan for in the world ahead." Let's try to understand how the dollar became became the most used currency till now, and why value of the US dollar is decreasing now, which is affecting US banks. Traditionally, the value of any currency depends upon the assets held by the country issuing that currency. Until about 100 years back, the most used global currency was the British pound, not the US dollar. After World War I, America, which was relatively untouched as the war was not fought on its land and received the largest chunk of wartime gold reserves, started replacing the British pound with the US dollar for international trade. The United States executed the Bretton Woods Agreement in 1944, promoting bilateral trade between countries in US dollars. In the late 60s, holding US dollars was considered more profitable than holding stocks or gold. Hence, its hoarding was common not only among individuals but also among countries. In 1970, the Bretton Woods Agreement had almost collapsed after the London gold pool was dissolved and Asian countries started to grow again. At the same time, the US faced a negative balance of payment crisis due to the massive expenditures during the Cold War and Vietnam War. In 1971, President Nixon cancelled the convertibility of the US dollar into gold, thus delinking it from the value of assets of his country. Thus, the value of the US dollar was now dependent on its global demand and not on the assets held by the American government. The introduction of petrodollars helped raise the demand for the US dollar, and to fulfill the demand, the US started printing more and more dollars. Later, in the 90s, the information technology boom further strengthened the demand for the US dollar, as most of the top IT companies were American and almost 80% of the IT industry was based in the United States. The US also used sanctions to discourage the countries from using bilateral currency swap agreements to trade in local currencies. Since America was biggest contributor to global agencies such as the IMF and the World Bank, all its disbursements were also in US dollars. As a result, developing or underdeveloped countries were forced to trade in US dollars. By the late 90s, nearly 90% of the global trade was happening in US dollars. Hoarding increased and more dollars were printed to cover the demand for the US dollar. Today, the value of the US gold reserves is nearly 544 billion US dollar, and they have issued hard currency worth nearly 2.3 trillion US dollar and US Treasury bonds worth another 27 trillion US dollar. The US thinks since the demand for its currency is high in the market, it can continue to sail on its artificial bubble. In the last several years, the US created war-like situations across the world, compelling countries to procure more arms, fuel, and other items from the global market, thus promoting trade in US dollars. However, since the US imposed economic restrictions on Russia and created roadblocks in its trade into US dollars, countries started thinking of alternatives to avoid using the US dollar. The introduction of the euro also helped countries break the monopoly of the US dollar. Over the last few years, many countries executed bilateral agreements to trade in local currencies. Countries like Russia, China, India, Brazil, Argentina, Egypt, the European Union, Iran, Japan, Saudi Arabia, the United Arab Emirates, and Turkey executed bilateral agreements to avoid the monopoly of the US dollar. As a result, the total circulation of the US dollar in the world declined significantly. According to an estimate, the global trade of the US dollar has declined by over 25% in the last 4 years alone. This can be reflected in the statement of the International Monetary Fund's foreign currency assets, where the share of the US dollar has been reduced from 71% in 1999 to just 50% in 2023 and is further on the decline. The global use of the US dollar is expected to decline further to 40 to 45% within the next few years. As we know, the US dollar is dependent on global demand, and once demand decreases, the value of the US dollar will also go down, and it will badly affect the US economy as well as US banks. Russia is trading in ruble against its cheap oil, while other countries are dealing in Chinese yuan, Japanese yen, Saudi riyal, UAE dirham, and Indian rupee. Also, BRICS currency is under development, and once out in the market, it will further decrease the demand for the US dollar. Thank you for watching, and don't forget to subscribe to our channel for new videos on important international topics.